If you can't read the major highs and the major lows properly, you are trading blind. The market leaves clues. Structure is the map, liquidity is always the target. I stopped guessing trades when I understood this. Let me take you through this. Now I have already marked this structure so that I can be able to explain it very clearly to you. We start from this high here because it took out this low and this low here. Now it created this low. We don't mark this low until it has broken this high. After this high is broken, we identify the liquidity, which is the low that caused the break of this high here. Now this is the liquidity, which I have already identified. Now, if you identify these three things, all you are focusing on is this thing here, which is going to help you to be able to take the trade. And that is all you need to take a trade. Market trade back after taking the liquidity always. That is where you are interested in understanding, either to take the trade directly or to wait for confirmation here to enter a trade to the upside. And this will usually be your initial target. We understood that. Now we are going to be tackling it one after the other like that. We find the major high, we find the major low, we find our liquidity, and then we see how the market is going to react to the liquidity. Now let me clear something here. If you look at this place, the market came there, and after this high that was created, it took out this high. It took out this high, and then instead of it to, because this is a break of structure, in terms of structure, this wick is a break because I'm using liquidity and structure to understand the market. This is a break of structure for me, and I expect that the market should come and take this low, which is now the liquidity, and go up. But as we can see, that did not happen. The low that we identify here, which is a major low because it took out liquidity from here, and after that the market broke the structure here. Hence this lowest low becomes what? A major low. Now this low rather got broken. That's the low that rather got broken. It is signaling us that this market may what? Try to reverse. This can be a shift in direction. Now, for me, before this can even happen, I can already have the instincts that this will happen. I will take you to, when I take you through direction, you'll be able to understand why I'm saying this, because there are some levels in the market that will tell you already, you know how the market is moving. And if it is traveling from daily level to daily level, when they get to a daily level, definitely they are going to reverse. And this could be a daily level. We leave that for another video. After this low has been broken, now you can see that if we trace it, if we trace price here from this place, this small thing was not really anything for me to call it a pullback. So I will trace it down until it breaks. Now, why did I trace it all the way down like that? Because this blue candle here, when it opened, it came all the way down first before going up, and that created this pullback here, and the pullback now came all the way down. According to what I preach, this is not the high that caused the break, and it is the liquidity. But why? Always after a reversal, the first pullback is your liquidity, because as at that time, mostly it doesn't create a low that will break it. So mostly it can break it and now give a pullback, and that pullback becomes your liquidity. It happens mostly at the reversal levels. This is an exception, and you need to notice it. If you find a reversal level, normally it can break the structure before leaving the liquidity there, and then comes back to pick it up. That is why we mark this high as our liquidity in this case. Understand this. Now, the market came, took that liquidity and created this high, and we marked this low as a major low because it has taken out these highs here. It took out this high and then this high and targeted the liquidity. So that make this low a major low. Now we wait for that low to get broken. We draw like this, and we see from this high the market came and broke it. We are interested in only the high that caused the break. If we look at it, we trace price from here to the down, up here, and then down here, and then up here, and then down here. The low that caused the break of this is this high here. I've already marked it so you can always see clearly. That becomes your liquidity. And now this is getting interesting because this is why I want to do this kind of videos, to be able to show you what can happen. Because when you go to practice this and you identify a high and the market does not return to it, you think that it doesn't work. But we have identified the low, the liquidity here, it was taken. We identified the liquidity here, I gave you the reasons, and it was taken. And we were using this, only this structure to understand this, and we were using also only this structure to be able to take this trade here. This is how we are only depending on the major high, major low liquidity to take the trade. In this case, this becomes our major what? Low. This becomes our major high. After it has been broken, we identify our liquidity. Now, the market never came back to that liquidity before dropping. But remember this, you will forget, but the market never forgets. Look at what happened. When the market came all the way back to that liquidity, it tapped right into that liquidity you identified as liquidity and came all the way down. It was a sniper entry and it traveled all the way down back into these lows. And these lows were also what? Liquidity. That tells you the market what? Travels from what? One liquidity zone to another liquidity zone if you mark them right. And you can see already from here why this low is liquidity. We will travel and then come back to that side. So you can see that the market came back there, took that liquidity and went down. That is it. We take it step by step and then you will get it, because there is some things that I need to explain to you here too in terms of the market structure. If we come here, this low here, we need to draw it. So from here we came down. Because of this bullish candle, we have to go up, come down again, and then we go up. Because this low has taken out this high here, you can see that there's this low here has taken out this high here. This low becomes a major low because of that. Hence, we needed to mark it, and when it breaks, we have to call it what? A major low, and then this high, a major high. But we don't want to have the market structure like this. Up, we came down here, we go up. If we go up here, we want the market to go down. We don't want this high to come and take this high out again. When that normally happens, you have to what? Transfer this high to this high here, and then you transfer this low to this low here, because you want the market to respect this higher high, higher low, higher high, higher low theory. Because if we are in a downtrend, the higher highs must respect the previous higher high, and the lower low also have to what? Respect the previous lower low. It's always like that. These higher highs have to respect each other. You cannot have one high come to take out the other. If that happens, then there is a force in the market. So there is a force structure in the market. You need to identify it and you restructure it. In this case, we have to identify this low here as our what? major low and this high as our major high. But we still can use these highs here to be able to identify the liquidity. Let me put them back. This high here and then this high here. Now the high that broke that, this high that broke this low was the liquidity. We went back to take that liquidity, and mostly they will even take this major high here before they run down. So all that is always what? Liquidity. They run down like that. And why did they do that? As at that point, if you think about it, why did they do that as at that point? Because there was already liquidity lying on top, and they are just feeding more liquidity into the highs to later come back into it, which they did later. I showed you that. From here, we created this low, and then market continued to trade down. Now you can see here, nothing happened. Market came all the way down. All this was nothing. There was no any relevant structure here, and it broke all the way down. Forget it. Now what I just explained to you here is the same thing that happened here. This low becomes a major low because it took out this high, created this high here, and then we broke it. Since we broke this structure here, we would have wanted that this high should hold like this, and then we continue all the way down. But we have this thing here that came and took out this high here and created another higher high. If we create this as our lower low, lower high, and we are coming here as our lower low, lower high, and we come here as our lower low, we can't go above this high. Hence, you have to transfer this high to this high here, and this low to this low here. This is something you need to take care of. From here, take notice of it. From this point, we can take this out, and then we take this out too. You can also take this out. We bring back the liquidity. And why was that liquidity? As we use this place here to what? Explain, you can see that high was liquidity. The same thing here. This high becomes what? The liquidity. Even as at this point, the high that broke it was actually that high. There was nothing that broke this low here. It was that high. Hence, it was clear that that high was going to be taken out. They tapped into that, and then they came down. That clears this confusion here for you. Then we now came here. This was something that was very clear for everyone. We identify our low here now because this low was now the one to take out this high and this high. They created this high here, and it came all the way down here. Now, if we draw this here, we can see that this is very clear. Everyone should be able to see this. This is the high that caused the break. This was very clear for everyone. Now you are going to wait for market to what? Trade back into that liquidity. But what happened? We can see the market created a major low here and then created a high that they came all the way down to what? Break it without coming to the liquidity. Remember, the market will never forget. You may forget. If we mark this as our liquidity, watch what the market is going to do. They came all the way back, see, back into that high, and then tap into it and drop all the way down. And where did they go to? From this high, they came back into another liquidity that we identify here, and then go back. They trade from liquidity to what? Liquidity. We will come down here and then explain why that low was also what? Liquidity. Same scenario. Now, to just give a gist about the entry, this particular entry here, you could use liquidity itself as an entry here. Why? Because this high here has taken liquidity from this, and if you measure it from here to here, this is the high. It was not just 16 pips. That was enough for you to use it as what? a protected high because it has taken liquidity already from here, and from this point in time you can just take that. And if you had been able to hold your trade all the way down to this place, you have over 6R here. Even if you were targeting this low here, which was reasonable, you have like about 5 risk to reward, which was very healthy one. If the high is so close and it's a protected high, you can just use liquidity as an entry and take it. Something like this, the high is a bit far. You can wait for what? Confirmation, and then you'll be able to take the trade from the lower time frame. That can reduce the stop loss, and then your risk to reward will increase. This is just the fractal that has caused that trade down, which I just showed you. We have to continue and then find the next fractal which the market will use. From here, we can see that the market created this low and then created this high, which came and then broke it. We identified this high as the high that caused the break. If we take this and then we draw it here, we can see that the high that caused the break was this one. From here, we broke it. This high becomes our what? Liquidity. Now, we want to wait until the market trade all the way down back into that, and look, when they came back, they tapped into that and traded all the way down, and they came back into this trend line liquidity I will explain later to you, and tap into that. That could have been your target. This could have been something that you can also take directly and put your stop loss above these highs, and then you try to target the liquidity lows that are here. This was also almost 4R. This is how you trade it, even using liquidity as what? Confirmation to enter. And for me, some of you, if you are watching, you can think that, okay, these sniper entries are always the sexy ones and all that, but they don't make the money. You see how market has consolidated here. There is evidence, it's clear that the market has given confirmation in the lower time frames for an entry. Maybe you could have even gotten the entry somewhere here, and then your stop could be somewhere here. It could be risking like 5 or 6 pips, and that could have increased your 3 or 4 risk reward to 7. This is always much even better. I want price to take the liquidity and then delay a bit for me. That is it. But price never stopped there. It continued down. Now, this low here, we are not identifying as a major low. Why? You can tell. It never took any high from here. You can see how price has just dropped and no high was created there. If something like this was created and price comes to take it, then we could have done that, but nothing happened there. We are not going to identify that this low as what? A major low, and we are not going to identify this high as a major high. And price came all the way down here. Now notice something here. As at this point here is the same thing that has happened on top here, which I showed you. We can see that this is a reversal point. The first pullback became our liquidity. So the market comes, tap into the level, push back, give a first pullback. That becomes our liquidity. It runs, come back to it. Now we know this is our liquidity. In this point, if you are going to use the market structure, to be able to identify, you cannot get it because the market is turning and there is not going to be a high here that if it breaks it here, then you can identify the liquidity here. But here it cannot break anything. The first pullback is always the liquidity. It came back and took that. Sometimes what it does is it will take the major low here like this and then go, which is some people call sweep of liquidity. It will take the major low here and then go. I will also teach about the major lows and highs being used as liquidity. These are external liquidities. So we will tackle that also later, because there are types of liquidity. Even here, I identified the trend line liquidity. I will still talk about that one. and I'll also talk about the relative equal highs and then relative equal lows. This was our liquidity after the first pullback. We know that because this low is a reversal point. Now market came back to that point, and then we identified this low as a major low after it has taken this high and this high, created this high that came all the way to take the liquidity. Now this also becomes a major high. It's a potential major high, and that high was supposed to lead price to break it down here, because as at this point we are only going to know that this may reverse. But if price didn't reverse, it breaks it and is retesting it, then the structure would have continued all the way down. That is why I normally call this a potential high, major high. So until the market breaks it, then it becomes a major high. In this case, you can understand now why I call it a potential major high. Since the market didn't break it down to make it a major high and rather broke it up, then that high becomes very significant for us to use to mark the structure, because either it's going to break up or it's going to break down if this level becomes what? A real level for the reversal. So if it breaks it up, now we can see it broke it all the way up, and the low that caused the break was this one here, which I mark as our liquidity. Now we will come back there and see how the market has reacted to that low. There is something I need to explain somewhere there. But from here, we can see as the market is going up, it did something here. From here, we trace the price up here. Now, go up here. Now, we can always see when it creates it like this high, low, and this high is structure. This low and this high is structure. Whatever is happening between this high and this low is minor structure, which is this guys here. So don't worry about that. Always trace it to the last one and then you push it up. We take this one because it broke this, then we take it and go all the way up. Now, how we know the structure to be happening is that it normally comes back to take one of these highs here. From here, we could see that it could have done something like this and then go, so that we could mark it as structure. But it never did that. It continued to create lows, 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 and then it's going. Retail traders are going to be buying into these lows and putting their stops just below it. The market will not forget. It will go all the way up and come back into that liquidity and take it all the way up before they move. This is what happens here. I will explain this type of liquidity in a different video by making it types of what liquidity is. The market came and took this is trend line liquidity and created this low, move all the way to the upside. If you knew this was liquidity, you can take an entry here, and then market went all the way up. We already identified this liquidity, tap into that, and look at this. This price action all was no structure. It came like this and nothing ever came back to break this low and this high. This is the lowest low that was created, and if we take it from here, nothing ever came back to break this low and this high again, this high here, and then this low. Normally, if they take it out, that's where we can mark the high as a potential high. But look at all this, they didn't do anything. You see, this is now the major low, the low, the structure low, not major, and then this is the high. This price action never did anything before they stop here, went all the way up again. All this, we cannot mark it as structure. This is what you need to understand. All this is just noise. They were just trying to induce more people to what? Start selling the market. If you don't know that this was liquidity, but now you know, they induce many people here to sell into the market. They come all the way back to take them out before the real move comes. We identified this now as our major high because it took this liquidity and then created this low here, which we expect that market should come to take the least low that caused the break of this high, which becomes liquidity. It actually reacted to it, but because there is a reversal in liquidity there, it comes all the way down and break this low, and then market structure push all the way to the downside, came back to this liquidity which we identify here. Now, to talk about that liquidity, this is the low that actually caused the break, but they came and then took on this low here. Now, this is something that has to do with the price action. The brokers print the candles different. So, in some brokers, you may see this. You see how price went all from up here and then came down here before they went up. In some brokers, this could be a pullback. And if this is a pullback, that's the pullback that caused the break. That is why price came back into that particular liquidity, tap exactly into it and run away without tapping into our liquidity. The price action from the brokers too is always what something to consider. This was it, and I think I don't want to make it so long. We can do more of this so that it clears a lot of misunderstanding that you can always find yourself in as you try to backtest and practice it. You can see here too, this was the low that caused the break of this major high here. After taking this liquidity, we ran down to that and then take it. If this video made any sense to you, if you learned something, subscribe to the channel and try to share the videos to more of people who need it. Let's help each other and then let's grow together. I wish you well and may the markets be with you.